What's good, Bit Rushers? It's Kyler, and in today's video, I'm going to be going over why Bitcoin has the potential to hit 20K and keep going. If that sounds good to you, stick around. First, you know what to do. Follow me on social media at BitRush9000. If you want, get at me in the Telegram group, also at BitRush9000. Link for both in the description. Here we go. Okay, guys, so I have a chart of Bitcoin here. And this is the overall chart, and as soon as it started charting, so there is lower prices here that were previous to 2016. It just wasn't on the charts. If we take a look at this, we can see that we had our all-time high here back in December of 2017. We were building up to that. From there, we dropped back down. And we've been building back up since, right? So since we had this low back down here, December-ish of 18, we started creeping up, and we were, working the channels, kind of up and down. This is COVID. So we had the COVID crash, pandemic crash with the stock market. And other than that, we haven't really had any corrections, right? So we were kind of already on this line. Like if you could pretty much chart that as a bait, and then you have this little piece sticking out below. So normally it probably just would have dipped to like here and went up, to about, let's see, 7,100, right? But with COVID, we had the extra dip. So other than that slight little pandemic crash, the price has been pretty steady upward. So why is that? Okay. So to understand why the price continues to go up and why the price will break 20K and most likely not have this dip back down, right? Like, see how here we came up and we had a slight dip, we came up, we had a slight dip, came up, we had a slight dip, came up, we had a slight dip, and then we just shot up. So we're like in this stage here, right? Like we're kind of moving up and we're having these corrections, slight ones. We're gonna have this huge rocket point, okay, that it just goes straight up the hockey stick, where it's just straight up, okay? But it's happening a lot higher. This happened from down here last time, from way down here it started. We're starting up here, okay? So we're starting in the middle of the stack, and we're kind of doing that same move. It's a lot faster. It's going way quicker, guys. So we're going to be off the charts here. I see us up here, 25, 30, 40, 50,000. To some of you guys, that sounds insane, and you're like, no, it's probably going to just crash back down and have a major correction back down to the $12,000 level. There are people that are expecting that, okay? So depending on who you talk to, it may happen. The reason why, I'm making this video is to explain to you guys the power of Bitcoin, okay? So Bitcoin is a deflationary asset. Unlike our currency, our fiat, which they continue to print more and more every year, and the value continues to lower. With Bitcoin, the value every year will continue to go up no matter what, as long as the demand is there, and I don't see demand falling off anytime soon, okay? So let's take a look at the stock to flow. If you guys aren't familiar with this, this is from 100 trillion USD, aka Plan B, on Twitter, and he has a website. I believe it's 100 trillion USD too, where he posts the articles on these. And if you haven't seen this is one of the most important charts for Bitcoin, okay? At least for me. This is one of the charts that really, when I saw this, I understood why the value is going to grow. I understood the power of the Bitcoin, okay? So let's go through it. I'm going to explain everything to you guys. These dots represent months. So if we come down here, a month to halving. So at the last halving was the dark blue, right? 0 months until the halving. So there was a halving right here. There was a halving right here, the most recent one, and there was a halving off the screen here that we don't see, but this is the beginning of the red dots. So we got like 1, 2, 3, 4 dots. So let's see, 1, 2, 3, 4. So there's probably 4 more red dots, and then the halving is down here somewhere, okay? If we wanted to see that on the chart. And then we can see each dot, it changes from red closer into orange, and then into yellow, green, bluish or teal into blue. And so let's start the last one. We have the halving here, and then these red dots was the farthest from the halving, okay? And it keeps going up and up and up and up and up. As we get into the orange dots, we start to see a major jump here, okay? Because we just had the halving right here. It takes time for some of that to see the market. There's still people holding their coins at this value. Miners are still, holding on to a bunch of coins that they're going to continue to sell off. They're not just going to sell them everything off right here and we're going to see a quick jump. It's a slow process. So after the halving, it actually goes down, right? The value kind of takes a little bit of a dip, a little bit of a hype for the halving, boom, and then it kind of dips. And then the miners are slowly raising the prices and selling and selling and selling until about here. When they hit these orange dots, this is where you start to get affected from halving, where there's no longer as many coins. All the coins that were accumulated at this point are now sold off, and now people are no longer willing to sell those coins at that price because the cost has now gone up, right? And so at this point, people start holding their coins, not letting them go. And the miners no longer want to sell at a cheaper price because they no longer have extra. They've sold off and made a profit from down here when they got them much cheaper. And so now they're looking to earn a whole lot more or hold on to them. This is supply and demand, guys. It's all it is supply and demand. There's the same amount of demand there was down here, except now there's half as much supply. The supply got cut in half right here, and the demand stayed the same and same and same, but we didn't see the difference from the supply and the demand until we start getting into these orange dots. Okay, so now that we're in the orange dot territory, you're seeing the difference of supply and demand. There's more there's more demand than there is supply because the supply was cut in half. People continue to buy and buy and buy, which shoots the price up, right? In these months, it just absolutely shoots the price up. And that's where we are right now. If you look, we're right here. We're 1, 2, 3, 4, 5, 6, 7 red dots. So 1, 2, 3, 4, 5, 6, 7. So this next one is going to be a slightly orange one. It's still pretty red, but then the one after that. So we have like one more month. Like December right here is going to be our last red dot. And then January really is the beginning of these orangey, reddish orange dots. Okay, so December, January, February, March, April, May. And this is 1 year. So from here, we're now 12 dots out. That's 1 year from the halving. Okay, and the halving happens every 4 years. So now over the next year after that year, from year 1 to year 2, we're going to go all the way up. And there's going to be way, way, way more demand than there is supply. And eventually it caps out, right? It caps out, and people stop buying as much at that height. They're like, this is just too ridiculous of a price. This is probably like, it's saying 10,000 here, but this is going to be like 20,000, guys. I'm telling you. Because remember, this is 10,000 on this chart. We're going to be up over here. So this is going to be plus 20, if not more, plus 50. Like 20 is going to be down here on our chart. We're going to be over 20 in December, okay, in January, and then it's going to double. It's going to pretty much double from there. We're looking at going to over 50K, guys, okay, if you put that same jump. And he has another chart where he has the upper end of this, and he predicts it. This is just the actual chart that we've had so far. If you look at the one, and I'll probably pause this video and go try to find it to show you guys, but it plots it all the way up to $1 million within the next like 10 years. So I will show you that here in a minute, but let's just finish going over this. So we're at this point where there's way more, or the demand trickles out, okay, and the supply stays the same actually. And so as the demand drops, people no longer willing to pay the price at that high. It starts to come back down again, and people have to start taking a little bit of a loss, right? On the miners anyway. They're maybe not making as much. They're breaking even. They're starting to get the pinch here. Comes back, hits down the line, and bounces back up again, right? So it's the same thing as like the stocks. They have different trends of like overbought and oversold, except this is going to be like demand, like over demand versus supply. And so we come off that line and then kind of touch back on it and bounce. And then that brings us right into the next halving, guys, and we start the cycle over. So here's the thing to think: we're right here. We're almost, we're getting into like the 1 year mark. Like as we get into March, that will be the 1 year mark, and we should have doubled our value by then. And then we're only going to continue to go up. We should continue to double from there, and then we'll have a little bit of a retracement over the next year or so. And that's a great time to accumulate, right? So as we're going up here, you sell off and you take some profits, and then as the market dips back down and corrects before the next halving, you can start to buy in again at the next halving, because the cycle is going to continue. Obviously, guys, not financial advice. Always do your own due diligence. Never invest more than you can afford to lose. But for me, I'm not selling any Bitcoin ever. The price is never going down, okay? We're never going to see... I mean, yeah, we might have this retrace. Like, it might go from here and have the correction back down, but then it's only going to go back up, just like it did. It went down and back up. Went down, back up. It's only going to keep going up from here. We're never going to see these values below... I would say like 7 for sure. I doubt it will ever go below 7. You'll be lucky if you ever see Bitcoin again below 10,000. Okay? It might happen, guys, because like it happened with Corona, COVID, whatever. You have some kind of catastrophic event. Yes, it can move the market. People can panic buy and sell, and things can happen. But other than a catastrophic event like that, that's going to just adjust the market, this thing's never going down. And I'm going to show you the other one, so I'll be back in 1 second. Alright guys, so this is the chart that I wanted to show you that has the full picture. This is just the prediction, so these are the same dots that we saw on our other chart. Let's just take a look. Okay, it's the same exact chart. It's just not as zoomed in, and we have the top line as kind of an estimate. So this is just a guess, right? Stock to flow model. Okay. So looking at the model, it brings us up to $100,000 at somewhere in 2021 to 2022, and that price is going to steadily rise until the next halving at about 2024, which should bump the price up into the $1 million range according to this chart, right? So what he did is he took this chart right here, which is the actual one, and has the 200 volume weighted average, and then he did some math here with this. I'm not sure exactly what it is, but he did his model and some calculations to guesstimate the other moves here. This move from here to here, and then that move from there to there on the halvings based on the same action that we had last time. See, so this is actual movement, and then that's a guess. We're doing pretty good though. Look, if you see like where we did last time, we did the exact same thing. And where did we come from? We came from about the mid thousand rate, right? Like $700-800 they were at back then. I would say probably like $700, $800. And then by the time we had that next halving, and even lower at the halving it was probably like $500 or $600. And I could go back and look this up for you guys. I'm just kind of guessing on this chart. But from there, it moved up from under $1,000, a couple $100 here, right, up over 10,000, and then by the next halving, which was 4 years ago, we were at like 9. Yeah, I think it was like 9 something for the halving, right around there. And then now, we're way up above that. We're getting close to 20. Okay, so we've done quite a move from 10 to 20 here, and it's just a small amount on this chart, and we're still pointing up. So that's my analysis of the stock to flow. I hope I did a good job explaining this, guys, and you can see that based on the past, like the past is a good judgment for the future. And here's the other thing that I want to talk about real quick. So back here, no one was in Bitcoin, right? We saw these same jumps, these huge moves from like $1, right? Like $1 range up to $10, from the $10 to 100, from the couple hundred up into the $10,000 range. All of this, guys, basically nobody knew about Bitcoin, right? Like 2016, this 2016 to 2017, we just started to get people jumping into Bitcoin. I just got into Bitcoin right there during the bull run in 2017, to be honest with you guys, okay? That was when everyone started hearing about it, everyone started trading, and that was only a small percentage. The point I'm trying to make is all the people that are basically in Bitcoin got in during this bull run right here. There are very few people in before, and we still saw those huge jumps. We saw this big jump with the people we have now, and there's 10 times more infrastructure in place for Bitcoin and cryptocurrency. Like back then, there was, I was trading on like, I forgot what it was called, GDAX, and which is now Coinbase Pro. They bought them out. Coinbase wasn't even around back then. You could trade on like Robinhood. There wasn't really like a whole lot of places to even trade, guys, right? Like, there's probably others. I wasn't huge into the scene. Like I said, I was just getting into the scene back then. But there wasn't a whole lot going on, and now there's so much stuff. Now you can literally buy cryptocurrency on PayPal. You can buy it on Cash App. There's Binance, there's Coinbase, there's all kinds of places, all kinds of exchanges. It's just so much easier. And now, you have like Grayscale buying in, you have MicroStrategies buying in, a lot of big institutional investors. We have Paul Tudor Jones. So all these guys are coming out and talking about Bitcoin, and they're starting to buy it. Most of these guys, if you listen to them, like Paul Tudor Jones, he has a 1%, or a single digit, not 1%, single digit allocation. So that could be 1% to 9% of his entire portfolio. Now, mind you, his portfolio is billions, so it's probably, a couple hundred million. But a very small percentage, right? A single digit allocation of his portfolio is in crypto. And he's one of the early guys to get in. So as these other large investors, institutional money starts to put a percentage, even a tiny percentage like that, like a single digit allocation for these guys is millions, okay? So when that money starts dropping and they start seeing this continue to grow and their money, quadruple while gold is just chilling, maybe making, its tiny percent gain, what do you think these guys are going to do? They're going to increase their percentage. They're going to take profits and wait for a small correction and increase their amounts, their holdings. That's what a good investor would do, right? You look at your charts and you say, what's earning me money, what's not, and you cut your losses. Or if you believe in that, you double down on it, right? If it's just something that hasn't exploded yet and you think it's going to. But if it's not performing, you don't think it's going to perform, they're going to cut their losses, guys. They're going to get rid of all the old stocks that aren't performing and start raising that allocation. It's going to go from a single digit allocation to like, a 2-digit allocation to now like, 90% of my portfolio or something. But that's going to take a while. And that's where we see this jump when we go from, you got a couple hundred million in Bitcoin to now people want to put billions, if not trillions, into Bitcoin. And there's only the same amount of Bitcoin, guys. That's the thing. There's actually less. There will be less Bitcoin here than there was down here when no one wanted to buy it. More and more people are going to want to buy it, and there's less and less Bitcoin available. Okay, so I hope that fully explains the halving and the stock to flow model and the supply and demand chain and what actually gives Bitcoin that value to investors, just like a gold, a deflationary asset. So I originally went into dollar cost averaging here, but it just ran on too long for this video. So that's going to be it for this one. It's going to be a 2-part. So look for the next video on dollar cost averaging coming later today. Thank you for watching. Smash the thumbs up if you enjoyed this video. Please share with any friends or family you think may also like this video, want to know about 20K plus Bitcoin here in the future. As always, happy crypto. Let's get that coin.